In Q3 2025, General Motors shocked the auto world with a $1.6 billion charge against earnings, not from poor sales, but a sudden government policy shift. This move forced GM to scale back its ambitious electric vehicle plans, signaling a tougher road ahead for the company's EV transition. About $1.2 billion of the charge was tied to cutting back on EV production capacity, factory investments and equipment for a market that's no longer growing as fast. Another $400 million went to canceling supplier contracts for parts GM no longer needs. The abrupt change highlights how vulnerable even the biggest automakers are to political wins. Without government incentives, GM expects slower EV adoption and is bracing for reduced demand. This charge is a costly but necessary reset, aligning GM's production with a more cautious outlook for electric vehicles in the US. It's a stark reminder, even the best-laid plans can be upended by forces outside a company's control. GM now faces the challenge of balancing its electric ambitions with new economic realities. The road to an all-electric future just got a lot steeper. The main trigger for GM's financial hit? The sudden end of the federal EV tax credit. This $7,500 incentive, a key driver for EV sales, expired on September 30, 2025. The change came after the 2024 elections, when a new administration and Congress moved quickly to dismantle clean energy subsidies. They argued the credits distorted the market and burdened taxpayers. The result, a last-minute rush of buyers before the deadline, followed by a sharp drop in affordability for mainstream consumers. Automakers like GM now face the challenge of selling EVs without the price break that fueled years of growth. The ripple effects are huge, impacting not just sales, but investments in batteries and charging networks. With the bridge of incentives gone, the industry must find a new path to make EVs competitive. GM's $1.6 billion charge is a direct response to this new, tougher market reality. GM tried to soften the blow by leasing its own EVs to customers, using a loophole to claim commercial tax credits and pass savings along. But this workaround drew swift backlash from lawmakers, who saw it as sidestepping Congress's intent. Under political pressure, GM quickly scrapped the plan after a brief trial. With no easy fix, GM had to accept the new reality: no more incentives, and no way to prop up demand artificially. The company shifted from creative sales tactics to tough decisions, cutting production, canceling contracts, and absorbing the financial hit. This episode shows how tightly corporate strategy is tied to politics. GM chose to avoid a public fight, absorb the loss, and focus on long-term stability. Sometimes, survival means knowing when to retreat and regroup. The $1.6 billion charge is just the start of GM's strategic reset. GM is now reviewing every aspect of its EV operations, delaying factory upgrades, scaling back production targets, and renegotiating supplier deals. The company warns more financial hits could come as it adapts to slower EV growth. But GM isn't abandoning electric vehicles, it's simply slowing the pace, prioritizing financial health over risky expansion. Current EV models like the Cadillac Lyriq and Chevy Blazer EV remain on sale. The focus is on right-sizing future capacity, not cutting today's offerings. This pragmatic pivot aims to avoid overproduction and deeper losses in a post-subsidy market. GM is balancing its long-term EV vision with short-term market realities. The goal: ensure the EV business survives and thrives, even if growth is slower than hoped. Despite the upheaval, GM's sales tell a more optimistic story. In Q3 2025, overall vehicle sales rose 8% year-over-year, with EV sales more than doubling, 145,000 electric vehicles sold in 9 months. The pre-deadline rush for the tax credit boosted numbers, but the underlying trend is clear. GM's EVs are resonating with buyers. The challenge now is sustaining momentum without federal incentives. GM has proven it can build and sell EVs at scale. The next test: making them profitable and desirable at higher prices. The road ahead is tougher, but GM's recent success shows its electric gamble is far from over. Even in uncertainty, there's real progress and a future worth fighting for.